Hey there, and welcome to my channel, The Paper Bag Investor. Today I want to ask the question many people like yourselves are asking: should I buy Tesla stock at $700 per share? So let's get into it. Before I go any further, I just want to make it absolutely clear, I'm not a personal financial advisor, just a guy with a paper bag on his head who loves investing and thinking about the future. If you love investing, you love thinking about the future as well, I encourage you, hit that subscribe button down below, follow along as my channel grows, and become a better investor with me. Okay, so the question for today: should I buy Tesla at $700 a share? It's on a massive run. That, just if you're counting, that's $3,500 a share pre-split before they did the 5-for-1 split earlier this year. So watch to the end of the video and I will let you know what I think. Should I buy Tesla at $700? So let's walk through this. Okay, first of all, how do we even know whether to buy a company or not? How do we know? And I want to make this comment: don't be the kind of investor that thinks the sort of reversion to the mean investor, that's your whole analysis. And many people really think like this with their investments. They think their entire analysis boils down to, because stock XYZ went up, it now must come down. It kind of works out to an average trend line. Or because XYZ went down, it now must come up. Could they apply that to whole industries, to the market as a whole, to specific companies? And basically, if you apply this thinking to Tesla, or if you had over the last, year and a half, you never would have invested as a stock has had this massive rise over the last, couple of years, because you always would have been waiting for a big, huge dip, because it's got to reverse back to some kind of mean or some kind of average. And really want to just hammer this home that this kind of thinking, this reversion to a mean as your sort of analysis of companies or as investments, this is stupid and not a good way to think about your investments. Okay, so scrap that. So again, how do we know whether to buy a company or not? What should we do then? You really have to evaluate the future cash flows of the company. Okay, and I want to just say this: your valuation and assumptions that you make around their company, around your investment, that's going to be your anchor as the price fluctuates up and down. And that kind of gives you your grounds or your anchorage to say, yep, I should buy more shares. It's still a good price. It's gone up, and even though the stock has risen, but I have more money available, I'm going to still buy more shares. Or at this point, it's becoming overpriced and I should sell my shares. It's really that your clear evaluation gives you that anchoring, gives you that strength to make those decisions. Okay, so let's look at Tesla's auto business, and we're going to look at just the vehicles only. And first off, I'm going to assume they do 500,000 vehicle deliveries in this year, 2020. It seems very likely. We'll know shortly here, early January, what they actually did, but it seems very likely they will do that. And assume they have operating costs of about $4 billion per year. This has been steady since around 2017. This is quarterly operating costs here, hovering around that $1 billion mark per quarter. So around $4 billion per year is a pretty good estimate for that, of their operating costs. And now let's look at their auto business in more detail, of actually what they could bring in, say 10 years from now. So assume their vehicle sales grow, let's say 40% year over year for the next 10 years. That's going to give you 14.5 million deliveries in 2030. Now, Elon's actually said by 2030 they might be doing 20 million in vehicle sales a year, or even sooner than 2030, like later 2020s, they could be doing 20 million vehicle sales. To put that in perspective, Toyota and Volkswagen, about two biggest automakers in the world, they each do about maybe 9 million in sales currently, so about 18 million of two of them. So but Tesla very well could be doing 20 million by 2030, but let's just assume it's 14.5 they get to that point. A little bit more conservative. And let's just assume they have an average retail cost of $50,000 per vehicle. Then you have $700 billion in revenue in 2030 for those 14.5 million vehicles they sell. And let's assume their average gross margin on the vehicles is 23%. That's what their latest number was, gross margin on vehicles. And let's say their gross income then would be $161 billion for 2030 on the vehicle side again. And let's assume operating costs grow 20% per year for the next 10 years. As things scale up, operating costs continue to scale as well. So it's a bit of a guess, that number, 20%, but we're going to pick that number. Okay, then you'd have $25 billion of operating costs in 2030, from $4 billion today to $25 billion in 2030. Then you have operating profit of $136 billion. Hopefully this isn't too much math for you guys. Wait till the end of the video and you'll see the actual breakdown of should you buy Tesla at $700 or not. Okay, so it gets down to operating profit of $136 billion. And we're going to say PE of 20 to the operating profit gives a $2.7 trillion market cap. Now, 20 might be kind of generous to the operating profit, but at that point in time, they still could keep growing their deliveries past 14 million to maybe 20, 30 million if they're just a dominant EV force. They have a dominant EV charging infrastructure around the world. They have the best batteries in the world. So that 20 might make sense. And on that side of it, then you get $2.7 trillion market cap. And 2.7 trillion market cap divided by the share price today of market cap today of 668 billion. I should say a T there, not B, or 668 billion. But today's market cap, that'll give you about a 6x increase over 10 years time. So pretty good increase, 6x from now to the end of 2030. And if you do your math, that gives you about a 15% compound annual growth rate. So it should be 15% a year, 15% a year, 15% a year, 15% a year, every single year. That's what the compound annual growth rate is, which is actually very, very good just for the vehicle side. Okay, so that's really, really good. And now let's look at if they achieve level 5 full self-driving and they actually have Robotaxi. So let's look at that side of the business for Tesla. And from 2020 to 2030, you'd have about 50 million vehicles in existence. If you look at just the numbers we just did, those assumptions, that kind of that overall production over that span of time. Of course, some of those vehicles, those 50 million, might be in an accident or totally used up and not actually in existence, but 50 million produced. And most of those would still be in driving around. And let's assume 20% are used as Robotaxis full time. You'd have a fleet of about 10 million Robotaxis in total. 10 million Robotaxis, and we're just going to assume each Robotaxi can do about 100,000 miles. These full-time Robotaxis, of course, 20% full-time. Some are going to be used part of the time, some are used full-time, but we're just going to use a sort of set number. 20% of all these vehicles produced are full-time Robotaxis. And as a full-time Robotaxi, we're assuming they have 100,000 miles a year driven. For the Canadians or other metric users out there, it's about 160,000 kilometers a year. But 100,000 miles, and we're going to say half of those are billable miles, 50,000 billable miles, and they're going to charge out an average rate of $1.25 per mile, which gets you $62,000 in revenue per Robotaxi per year. And we're going to say they get about 25 cents a mile. This is from ARK Invest, from their analysis on EV Robotaxis, what the cost per mile could look like over time. So about 25 cents per mile overall, you get about 25,000 in expenses and a net profit of $37,000 per Robotaxi. So if we assume 22,000 goes to the vehicle owner and 15,000 to Tesla, exactly how that's split is just going to determine, Tesla this 22,000, Tesla's just going to make whatever amount is appealing enough to people to motivate people as their own investment in their own business to operate Robotaxis, make that number appealing enough. So it could be higher, it could be lower than that, but 22,000 is the number I picked, and then 15,000, the remainder would go to Tesla, 15,000. And so you get a Robotaxi operating profit for Tesla of $150 billion a year. So that's just the 10 million Robotaxis in existence times by $15,000 each per taxi per year, $150 billion. And you have a PE of 40. I gave this a higher PE because than just the automotive side, because the automotive side could keep growing from 14, 15 million vehicles delivered a year. But the Robotaxi side, if you only have 10 million Robotaxis, if they come and if we really actually achieve level 5 full self-driving, they're going to be in very, very, very high demand. Just basically can fill almost every vehicle that exists, up to probably kind of 2 billion vehicles on the planet. People would want Robotaxis. So 40 to the operating profit is actually probably very conservative. Could be much higher than that just for that side of the business. But that's what I gave. So 40 to the operating profit gives a 6 trillion market cap from the Robotaxi side of the business. And if we add that to the vehicle side that we analyzed before, you get a market cap of about of 2.7 trillion. Plus the 6 trillion gives you 8.7 trillion overall in 2030. And 8.7 trillion divided by the 660 some billion market cap today gives you about a 13x increase over 10 years time. And that's about approximately 29% compound annual growth rate, which is extremely, extremely good. That's like basically if you just sat on this for 10 years and this happened, you work out to 29% every single year on your investment, just compounding and growing at that rate. So that's very, very, very good. Obviously, 15% we had before was still good, but 29% is phenomenal. Okay. And just remember the assumptions we made that Tesla has to grow to sales of 40% year over year. So that's a pretty big steep growth curve to go from 500,000 now to 14.5 million in 2030. But also they would need for the second part of the bigger part, the Robotaxi side of the business, they would have to reach regulator approved level 5 full self-driving needs to be achieved. So obviously Tesla needs to make that for that side of the analysis to make really be fully completed. But also remember, this doesn't include energy storage or solar, I should say, or the solar sides of the business at all. So there's whole segments of the business we're not even including in this analysis. And also just think for a moment too, even if no one ever achieved level 5 full self-driving, it wasn't ever possible, we just didn't do it till 2050 or something, they would still be getting revenue from just the software side of the business from this side. But okay, so the guy with the paper bag, this side of the business, not the full self-driving, but the driver assist, at least they would still be generating some software profits. Okay, so the big question really, this whole video, why you're here and why you're watching, is you're wondering, so guy with the paper bag on his head, should I buy Tesla or not? That's what you're wondering, right? So here's my thoughts, okay? To get 15 to 29% compound annual growth rate for the next decade, if you really think that Tesla's going to execute and achieve what we're showing here, that is phenomenally good investment return. I think it was like a 6x to like a 13x on your every dollar you put in today. So amazing to 6x to 13x your investment over 10 years is very, very, very good. I think Tesla will easily sell the amount of vehicles we forecast and beyond. I think Tesla is just going to be a dominant. I think the world's going to electric vehicles for a number of reasons. Just their better product overall, and environmental reasons are going to be huge. So I think Tesla with their leading technology in battery technology, their leading sort of first mover advantage in being the first huge electric vehicle maker that's out there, and their infrastructural advantage of all the charging stations they're having, I think they'll easily sell this 14.5 million by 2030 and beyond that. I think they could sell 20, 30, maybe like 40 million vehicles a year in the future. And so I think that's very likely what we laid out is possible. I also think Tesla will achieve level 5 full self-driving in the next few years and have the right, because I think they have the right approach to that. I've done other videos on that as well. I'm actually researching right now some videos on LiDAR, which I don't think is really a scalable technology for full self-driving. It really makes sense to scale it. And I'm doing some further, deeper research on that, and I'll have some videos for you guys. So if you're not subscribed already and you're getting value out of this, I encourage you, hit that subscribe button down below. and watch for those videos that will come out. But I do think Tesla has the right approach, and I'm very encouraged with their full self-driving beta progress that I'm seeing, and I think they will reach level 5 in the next couple of years. Okay, so to answer your whole question, should I buy Tesla or not, Mr. Guy with the Mr. Paper Bag Investor, do your own due diligence, really. This is not financial advice. I can't give you personal financial advice. You have to do your own due diligence, your own thinking, have your own convictions. But I'm still buying. I'm still buying Tesla. I still think, even at $700 a share, which works out to $3,500 a share pre-split, I still think Tesla has a lot of room for growth ahead of it. I still think this analysis makes sense. I still think they can execute and achieve this analysis, this scenario somewhere in there. And that's very, to have that kind of conviction behind something, and then to see that you could still get kind of 15 to 29%-ish range returns, compounded returns on that for the next 10 years is a very, very good investment. So in that reason, I'm still buying. That's kind of my bottom line on Tesla. I'd love to hear what you guys think about all this, about this presentation, about Tesla itself. Let us know in the comments down below. Let me know, let everybody else know. I would love to hear from you. If you got value out of this video, please hit that subscribe button down below. Follow along with my channel as it grows and become a better investor with me. And if you haven't done so, please hit that thumbs up. Smash the like button, as I say. Helps my channel grow, helps the algorithm, so I appreciate that as well. Thank you for watching. I'll see you in my next video. Cheers.